The markets have fizzled out the up move and are kind of getting into the slightly lower end of the range, if you may call it. 44,800 on the Bank Nifty, 16,400 again being revisited on the Nifty. It's the mid cap and the small cap end of the market which is showing much more resilience in trade today. We have Mithun Aswath of Kivah Advisors joining us today to talk more about markets. Mithun, thank you very much for your time and great to have you on the show. First of all, how are you really approaching the investing landscape right now with the big rally under the belt, but then macros and liquidity kind of supportive at the same time? How are you balancing things?
Yeah, good afternoon, Ajay. I think the current markets, FI flows have been quite strong in the last couple of months, and I think in the month of June itself, you saw close to $5 billion come into the Indian markets. Despite that, the recent up move, we do still see opportunities both in select large caps as well as in the mid and small cap space. I think one needs to be selective in the mid and small cap space, but there are pockets where there is value, and people who have a 12 to 18 month outlook, we continue to be quite positive on the markets because the earnings growth is visible.
Okay, sure. Mithun, let's talk about some of the themes which you like. Textiles is something which you like, and you're expecting operating margins to expand. I was just looking at the biggest and cleanest names out there. Gokuldas Export making all-time high once again. Just 2 quarters back, it was being punished because of slowdown in US and Europe. Though data there much hasn't changed, but the people who are looking at the view towards Gokuldas seem to have changed. Which are the names which you are advising your clients from this space?
Yeah, Ajay, I think in this space, the technical textiles is one area which looks quite interesting. So there are opportunities within that landscape which could be looked at because this is maybe a little bit more of a secular theme where more outsourcing comes out of India. Another opportunity which we see maybe cyclically is towards the bottom could be the home textile space, which did very well just post COVID, but then went through a lull as inventories built up, and also the cotton prices had shot last year. But some of this space, some of the stocks in that space may now be on a revival path because a lot of them have capacities already set up, and now the margin should improve as the cotton prices come down, and also the logistics and supply chain have issues also have been resolved. So that is a space where I think Indian companies are quite strong, and there are a few listed companies there where one can look at.
Okay, fair point. What about pharma? We are looking at the US generic pharma name, which are kind of rising very sharply. Look at how Sun Pharma back to almost 1100 on reducing pricing pressures and other things in US. At the same time, some of the domestic names showing very good growth, JB Chem, Mankind, etc. Which end of the pharma spectrum are you bullish on?
To be honest, Ajay, this is one space where we had positions during COVID, and towards sometime last year, we've booked profits in that space. From a longer term perspective, we are more positive on the domestic pharmaceutical companies, primarily because those businesses are akin to maybe like a consumer business, and the predictability of those earnings are a lot more. So we would be more focused on that space. At the current juncture, there's nothing that we are, very positive on, but we keep analyzing and looking at that area. And if there are opportunities where the valuations are in our favor, we would definitely look at.
Like in consumer name, that is also one sector which has rebound. Hopes of normal monsoon and volume growth coming back, margin pressure easing out, all of that.
Yes, I think the FMCG companies, though the volume growth may not be that high this quarter, definitely the margins should improve. and that is our expectation. It is not only for the consumer staple names, even some of the consumer discretionary, like maybe the automobile sector, is likely to report very good profit growth in the current quarter. These spaces are coming off some sort of underperformance over the last few years, and I think the cycle is likely to turn upwards.
What about financials? Do you like something in financials, especially mid-tier, either PSU banks where consolidation may be getting over, some of the regional banks like J&K, South Indian coming back, or even microfinance? Anything you like apart from the large ones in financials?
Ajay, to be honest, we've stuck to the large private sector banks in our financials exposure, and we've tried to play the recovery in India through other consumer discretionary names, and you say the auto sector as well. But if you valuations on maybe some of these microfinance names are still very attractive, and the provisioning is likely to come down. So you will see good profit growth, I think, in the next couple of quarters. Just on a valuation parameter, this is no suggestion or anything. Companies like a Manappuram or a Ujjivan Financial look quite attractive based on just on the numbers.
You seem to like realty as well, but the problem with certain part of the large realty names is valuations. How are you navigating that space, or are you playing it via the ancillaries?
Yeah, typically we've played real estate through the building materials and sanitary ware and things like that. Be it cement or paints is something that we've been positive on. We also like companies who are on the sanitary ware side. So those are pockets that we like. There is one exception that we've bought also on the real estate side is called Prestige Estates, where this has been largely a Bangalore-based company which has now embarked on quite a large expansion plan in Mumbai as well. So I think that is one that has worked well for us over the last year or so.
Talk to us about some of the other small or mid-cap names, irrespective of the large sectors which you are bullish of, where earning trajectory is more structural next 3 to 5 years, and the market cap is still low, valuation not really stretched right now.
I think one of the companies that we've been quite positive on and has done well post-COVID as well is Eveready Industries. This is a company which was there has been a management change where the Dabur management or the Burman Group has taken over the promoters, and this company is a leader in the batteries segment. They are also leader in the flashlight space, and they are also entering the lighting solutions sector, and that is a space where they expect to grow quite aggressively. The management itself are looking to are expecting revenues to double over the next 3 to 4 years. So this is a company where we see that there is likely to be a transformation. One, in terms of management. Number two, it's in terms of the distribution itself. They have worked upon. And number three, I think with the commodity prices cooling off, you should see margin improvement, especially in the battery segment, which is their largest segment in the coming year. So this is a company where they have about 350 crores of debt and about 1,250, 1,300 crores of revenue, and market cap is around 2,400 crores. We think this is a good opportunity where you're getting good quality management, a reasonably clean balance sheet, and the runway for growth is there.
Mithun, Eveready, just a quick follow-up. If I assume this management change and the new strategy at work for the next 16 to 18 months, say FY25 closing, if I take, how much do you think the earnings complexion of the company and hence the multiple it has been getting so far, the street has been assigning it, change? What kind of numbers can it throw up in your view by 25 closing?
See, I think last year's base is also very low because they had a lot of exceptional items. But let's look at at an EBITDA level. I think over the next couple of years, the EBITDA could more than double. So I think there is merit in terms of upside here. Also, if you know, there is a dispute with KKR, and because of that, new fresh capital cannot be infused into the company. And whenever that gets resolved, potentially, you could see the Burmans even increasing their stake in this company.
Very interesting. All right, Mithun, thanks very much for your time. And we will be interacting more on this platform from here on. Thank you so much.